All right, good afternoon, everyone, and thank you for joining the webinar this afternoon. As usual, we are recording this webinar, and it will be posted on ISAC's website afterwards, along with Carrie's presentation. For questions during the presentation, please use the Q&A feature, and we can answer those throughout as needed, or get to them at the end. And I think that's it for my housekeeping, so I'm going to pass it over to Carrie to get us started.
Thanks so much. Is everyone seeing my full screen with my name and all that good information on it? Are we good? Are we good to go? Just someone tell me no if not.
I can just see you on the screen. I don't see your presentation or anything.
Oh, okay. Okay, so let me try that again here. Okay. Okay, how about now?
Yes, it looks good.
Okay. All right. So hopefully now it's more of a full screen view.
Yep.
Okay. All right. So thanks everyone for joining the presentation today. Again, this is Carrie Johnson, Department of Management. And what I wanted to do with this webinar is just provide an overview of the county annual financial reports that folks have to complete. Just give a variety of updates and provide the basics. I do know there's some new county auditors out there, and so I want to provide a chance for anyone that's sort of new to the process to get a bearing of what the information is that's being provided and kind of the why that we do it, that sort of thing. So I'm going to cover the annual financial report timeline and the requirements. I'll give an overview of what is actually reported, kind of walk through some of the different pages of the annual financial report. And then applicable to everyone this year is a new page in the GAAP report. So per some legislation that passed a couple of years ago, there is a new page that was added to the GAAP report, and I'll cover what's required in that additional page that's new for fiscal 25 reporting. And then I'll also walk through the online process as you work through it within the DOM system. So that's our basic agenda. And again, if you folks have questions, we'll just kind of handle them as we go. Um, we've got plenty of time for the presentation itself. So if there's questions at the end, we can cover those as well. And then also, of course, feel free to follow up with any questions you may have after the presentation or as you may be working on the AFR over the next couple months. So first off, we're going to talk about sort of the timeline for the AFR annual financial reports. What's the timeline, what's the due date, that sort of thing, and what the requirements are and any penalties. So the county annual financial report is a requirement of statute. And there's the deadline for the annual financial report. And for most of you, this is two separate reports, is December 1. So essentially, 6 months or so after the end of the actual year. So fiscal 25 report is due December 1, 2025. So you do have to publish one page from the AFR that is in the same format as how the county budgets. One of the purposes of the annual financial report is to compare, how that year was budgeted versus how it actually ended, right? So, compared to how we budgeted, how did we actually end up? How far were we off? It's good financial information. Most counties in Iowa do budget on a cash basis. There's a handful that budget on GAAP, but those that budget on a cash basis complete the cash report and publish a one-page sort of summary from that cash report. And again, December 1 is the deadline, and it's the deadline for both reports. All counties are required to complete a gap report by statute. So state code says everybody has to complete and submit a gap report. And when we say gap, we're talking about generally accepted accounting principles. So if the county budgets on a gap basis, modified accrual, that is the only report they complete. So obviously they don't budget on a cash basis, they budget on a gap basis, and they complete the gap report. Again, one of the main differences between the cash and gap, of course, is just the accounting method, obviously. With the gap reports, there's the inclusion of a balance statement, and also it's, modified accrual. Another main difference beginning with the fiscal 25 gap report is the inclusion of that additional page per the requirements of House File 718. So when you look at the reports, they look very similar, other than gap has an additional page for balance sheet and an additional page for debt reporting. Okay, so as far as the annual financial report itself and sort of process, the Board of Supervisors is not required to act on the report. There's no publication of a notice of a public hearing. You don't hold a public hearing on the report. It's simply an accounting or a statement of how that year actually ended, right? There's no real action to take on it, other than making that newspaper publication. And of course, again, you make that newspaper publication from the cash if you budget on cash, gap if you budget on gap. So I said the deadline is December 1st, and that is the case for the publications. So you have to get those in the newspaper by December 1st. For those that budget on cash, but also have to do the gap report, you're not publishing anything from the gap report. You already did that with your cash report. So for the gap report, you still have to complete it by December 1, but you complete it and sort of finalize it by posting it on our website. So then we know you're done and it is publicly available once it's posted on our website. So anyone can come to our website, of course, and view those reports once they're published and posted. And again, just reiterating, if you budget on gap, then you don't complete a cash report. One final thing to note, AFRs can be amended as needed after you initially submit them. Sometimes you might complete your cash report, for instance, your audit firm comes in to do your audit and you need to make a correction to that annual financial report. So that's fine. There's a process to amend the report. In most cases, it doesn't require an initial or an additional publication. If it really changed your financial position, there was some, major error that was showing in that first publication, I might advise that you just republish and kind of go from there. Obviously, the amended version of the report is what we would consider final. And after you amend, that is the version that would be public on our website too. So again, you can amend at any time throughout the next fiscal year as you may need to. Most times it doesn't require an additional newspaper publication, but if it is something, a major change, then it might make sense for you to follow up and do that additional publication for your residents. One question I always get from folks is, hey, so December 1st is the deadline. Can I get an extension? And the answer is no. And it's just simply because there is no extension provision in statute. So December 1st is the deadline, and that's the way it is, right? There is no way for you to submit a letter, request an extension, none of that like there is with the budget. There is, for the most part, no immediate financial penalty with a late report. So I don't know, it's more than a few. A number of years ago, they updated the language regarding penalty for late reports. So again, it's December 1, what you have to do is you have to complete that annual financial report, both of them, cash and GAAP, if applicable. You have to complete those prior to publishing your notification for the budget public hearing for the adoption of the full budget. So you have to get that gap and cash report done prior to publishing your budget notice. So, whether that likely probably February, something like that. For that next fiscal year. If you don't do that, then Department of Management essentially won't certify your taxes back. So again, you must complete it. What I would highly encourage folks, though, I mean, obviously things happen and reports may come in a little late. Don't push the issue. In particular, starting with this year with that new debt reporting. I'm going to talk about it a little bit later, but we at DOM have to complete a debt report from your submitted information by January 15th. So we really need that information to be submitted to us so we can fully report on counties to the General Assembly by January 15th. And obviously, if you haven't submitted, if you're, not able to submit or you're, just kind of not getting it done, then that creates a real issue for us being able to fully report to the General Assembly on the debt. And it's going to be a matter of us saying, well, these are the counties for which we have no data. And, obviously nobody wants to be called out in that way. So just a side note, but it is December 1st. There's no immediate financial penalty, but you got to get it in as soon as you possibly can after December 1st if for some reason December 1st is a problem. And certainly if something's going on and you don't think you're going to meet that December 1 deadline, send me an email right away so I know what's going on. I can't say, yes, you can have an extension. That's not something I can do. But if there's something, some other way I can help, I'm happy to do that. So that's sort of the overview of kind of the general what and why and when we are submitting those annual financial reports. Both of those reports are available on the online system. I know people oftentimes, if they're cash basis, like to get into those quick after the fiscal year is ended. So I know many of you may already be in there sort of plugging away your data. But yeah, they're out there and available for you to work on as you're ready to do so. So what I'm going to do now is take some time to provide an overview of what's actually reported. And for some folks, again, if you're more experienced, this may seem a little bit routine for you, sort of like an overview that of things you're familiar with. But for anyone that's new, this is just a good way to get a handle on what's reported and how the program itself is actually looking at some of this data. And I'll give some examples of different things, and then I'll also talk a little bit about the gap report and some of the ways that it's different, in particular the balance sheet. We'll talk about the balance sheet as well. So one quick note for reporting of mental health expenses. As you all know, they are moving away from regional provision of mental health services and now goes to behavioral health and administrative service organizations. I think that's what ASO stands for. At any rate, so fiscal 25 was the last year that it was a regionally operated system. So as you are, looking at it right now, we are currently in this transition period. The regions were given instruction from HHS on sort of how to work through that financial transition period. So if as you're going through, you may have questions and you may need to work with your regions on any sort of money that's still needs to be figured out within the system. Their closeout period, I believe, ends December 1. So, so again, that's sort of going on right now as far as the regional side of things. Polk County, since it operated as a region for the last time in fiscal 25, they're going to be working through those expenditures like they had in prior years. For all other counties, as far as the county budget and county AFR, the reporting of any reimbursable mental health expenses were handled as a sub-fund of the general and with that 90/40 reimbursable MHDS code. So that's where you'd see, any of those county expenditures be reported. And this is mental health advocate, for instance. And then also then the reimbursement coming in from an intergovernmental source in that 25/45. So, you know, there again, there may be some questions related to just the transition of the regions. Please work with your regional folks, your regional CEOs, as they work through that transition period, and hopefully, you can get questions answered that way. But for the purposes of the AFR and county expenses, unless you're Polk County, most of those expenses would be shown as a 90/40 and then offset with intergovernmental revenue. So that's just sort of a broad overview of, one of the items that is changing or sort of flowing into a different format as we move into fiscal 26 and in fiscal 25. But I'll take some time now to go through some of the specific pages or tabs of the annual financial report. And one page, of course, to take note of is the page that you actually publish. And it's sort of an overall summary statement of your revenues, expenditures, and changes in fund balance. Again, this is the page that has to be published no later than December 1. So it's mostly, and I'll show you what it looks like if you're not familiar, but it's mostly completed by the software. So you'll enter data on supplementary pages and it's going to pull over into this um, summary page for publication. The one column of entries you will need to make is the column in budget totals. So you need to go back, pull out your fiscal 25 budget and any amendments, that budget reflecting any amendments, and enter in the budget totals column, kind of, what was the last budget as amended? What did that look like? And the reason why we do that again is because you provide for comparison purposes to your public um, the sort of the ability to see, well, how did we budget for these things and where did we actually end up for this fiscal year? So that's again why we do that and why we have that as being published. So this is just what a completed just a portion, obviously, of the summary page for publication looks like. You've got all of your sort of collapsed funds up at the top, your totals in actual. Again, this is all white, so it's coming from a different, the supplementary pages of the budget, or excuse me, of the AFR. And then this final column, you're going to plug in your budgeted totals. Now, this is a completed report from a prior year, so that's why it's all white. But if you opened up your fiscal 25 AFR, you'd see that this column, the budgeted totals column, is blue. So that's where you go in and you plug in your budgeted totals. So just to sort of see kind of what that looks like when it's actually completed. And you can see if you were to make some comparisons here, you can see that obviously budgeted and actual aren't going to necessarily match up, right? I mean, it makes sense. Your budget is your best guess at how things are going to come in. We know that you get most of the taxes that you ask for. Tax collection for property taxes is pretty high, usually at least 90%. So we know that those numbers are going to be pretty close, but obviously, like in this case, They budgeted, 5.6 million for intergovernmental revenue, monies coming in from other levels of government, federal, state, and other local governments. And then the actual totals actually ended up being 6.1. Um, you know, Licenses and permits, they budgeted conservatively at 11,000, but it came in at 28,000. So again, we don't expect these numbers to match, and it would be kind of weird if they did. But it's just a way to make a comparison and kind of see, how that all looked when we end the year. So that is the page that you publish. There's also a page that is really just a summary, right? And so it's not published, but it sort of provides a summary similar to the publication page, but it doesn't have that budget information in it. And both the gap report and the cash report have a page that's a summary page that you can see everything just in one, condensed into one page. So those are the first two pages of the budget excuse me, of the AFR. Sorry, I'm going to probably say budget a few times. Um, the rest of the pages, the supplementary detail pages, are going to feel a lot like your budget forms, right? So there's a page for all of your revenues, and there's a page for each and every service area or program area that are within the budget. It matches right up with what the budget looks like. So we'll talk first about the revenue page. And again, this is where you enter your revenue by line and by fund type. And when we think about those revenue sources, just obviously it's going to mirror the budget, like I mentioned. It's going to use those chart of accounts numbers that are built into your software. If you have any questions regarding chart of accounts, you can always go out to our website and take a look at it. And the most recent version is under our forms and templates on the county resources page. So you can always find it there if you need it. But again, it's going to look very much like the budget. And you're going to be pulling, reports from your local software that'll give you those actual numbers. Now, there are a few of the lines that I want to touch on just because they generate more of the questions that I get. The first four lines of that revenue page are dealing with property taxes, right? So, and I'll show you an example in a minute, but keep in mind that the line one you'll see is white. So line one, taxes levied on property, is going to be a calculated field. And also keep in mind, taxes levied on property will probably not exactly match what you certified when you did the budget for that year. Rounding is going to come into play. There could be other sorts of issues that came into play that resulted in that not exactly matching what was initially requested with the budget. So don't try to make them match, is what I would say. So what line one is, it's the sum of the lines below it. So it's the sum of line two, which is the uncollected delinquent taxes. So that's the amount of taxes that are due but not paid during the year. It's going to also include line three, which is credits to taxpayers. So that is what the amount that is within your county that folks are getting credit for against their taxes. And one thing to mention about this, when we think about credits against taxes, we know that while the county may ask for $1 million in taxes, some of the residents within your county are going to qualify for credits. So they're not going to be paying in total $1 million, right? They may be paying $800,000 in total taxes. And then the difference of that is the credit. And then the credit is a state replacement that comes in. So while you ask for a million, you may get 800,000 in actual property tax dollars, and then say 200,000 in state replacements against those taxes. So line 3 represents the full amount of the credit. And then further down on the revenue side, on that revenue detail, you'll see line 14, which is state replacements against levied taxes. So usually they're equal to, but they're never less than. So line 3 represents the full amount of credits given, and that's always equal to or greater than what the state actually replaces. So they're not going to replace more than people got as credit, right? Um, but a lot of times they offset or are very close to. And then net current property taxes represents the total property taxes collected and paid during the actual levy year. So that is, what did you actually get in taxes? And then if we add those three items up, that gets what you levied, or essentially what was requested at the end of the day on line 1. Delinquent property taxes, that's taxes collected for prior years. So if somebody came in and paid their fiscal year 24 property taxes and their fiscal 25, that fiscal 24 would be delinquent property tax revenue that you received. A couple notes with the uncollected delinquent taxes. You don't want to report negative uncollected delinquent taxes. You wouldn't ever have negative tax. And again, sometimes people get kind of determined to force those numbers to match what you actually levied on your budget. Not that they wouldn't be close, but we wouldn't expect them necessarily to match exactly. Counties may actually levy a greater or lesser amount if there's a late change in value, like a board of review change that happens after valuations were certified and budgets were done, some sort of omitted assessment that came on the roll, erroneous assessment, just a regular, just correction of some sort, or any rounding may still drive things to be off a little bit. So just keep that in mind. I don't want you to stress if they don't match exactly. Again, when we compare budgeted to actuals, it's probably not going to match exactly, and that's fine. That's to be expected. And then just on the accrual side, any in property taxes collected in July and August could include collection for the prior year, and then also delinquent taxes for the year prior to that. So just sort of keep that in mind. July and August collections for the immediate prior fiscal year are accrued back to taxes levied on property and net property taxes. And July and August collection for years prior to that the year that you're reporting on are accrued back to delinquent property tax revenue. So just sort of a distinction to keep in mind there. And then the other item related to property taxes, of course, that you're reporting as a revenue are those penalties and interests and costs on taxes. So any sort of revenue that is due to interest and collect costs, penalties, that sort of thing, is reported on that line 6.
I have a
The law,
question
yeah,
whenever. Yep. It says, where did Carrie say we must enter the budget totals in blue cells?
yeah. So that is, I go back here. So if you're a cash basis county, there's a column on the published summary page. So the page that you're actually publishing, everything in these columns are going to pull from other pages. But if you actually have, your blank form, this page, this budgeted totals column, will be blue, and so you'll have to plug those in. And if you forget, the system will remind you that those aren't listed. So it is an error that the system will check if you forget to plug those numbers in. You'll need them for your publication.
Thank you.
Yep. Okay. So we talked about sort of the property tax side of the revenues detail page. Most of your other revenue lines, will be just sort of mirroring, those large revenue categories, intergovernmental and charges and fees for service, that sort of thing. So you're going to be pulling those actual numbers from your software, and again, they mirror what the budget form lines. A few other lines to note: beginning fund balance is on line 34. You do need to enter the beginning fund balance by fund for the beginning of fiscal 25, right? So and keep in mind, and this is always confusing, especially if it's sort of language you're not familiar with. When we talk about a beginning fund balance, the beginning fund balance of, say, fiscal 25 is essentially the ending fund balance of fiscal 24, right? I mean, it's the same number. You end one year with $1 million in fund balance. Very next day, you start the next fiscal year with that amount, that $1 million in beginning fund balance. So, sometimes that gets confusing. So, you do enter your beginning fund balance for your fiscal 25 by fund. And again, that's, something that'll be a reported item out of your system. Total resources, that is a calculated field, and so I just want to take a moment on it. It's line 35. And total resources, like I said, is produced by the software, and it adds together line 33, which is all your revenues, and line 34, which is your beginning fund balance. So when we think of total resources for fiscal 25, obviously all of our revenues that we got in that year were our resources, but also any fund balance we came into the year with, that's also a resource for us, right? You can expend either of those pots of money, either at beginning fund balance and plus anything we generated for revenue during that year. One thing to note too is that your total resources are going to equal your total requirements as listed on the service area 0 page for each fund and in total. And again, that's a forced balance that the system does. So it says, if you have this much resources, that has to equal the amount of requirements you have for that fiscal year. So it's not an entry you make, it's going to be generated for you based on all the other things that you put in there. So just to sort of, show what this looks like, if we're looking at an actual page here of the revenues, you see, the ones I talked about here, these top lines that are related to property taxes. On the revenues detail, again, blue cells you enter into, you print off your reports from your software and plug these numbers in. It's your, revenues by fund again. And the line 4 is where you're going to enter your uh, actual property tax revenue, property tax only revenue that you got. You're also going to enter the uh, the delinquent taxes. Whoops. Delinquent taxes for the year, the credits that were given to taxpayers, and then those numbers 4, 2, 3, and 4 added together equals what you actually asked for. You also enter your delinquent property tax revenue, and any sort of interest and that sort of thing just goes into the general fund. One of the other items I mentioned is that you want to make sure that when you're talking about credits and state replacements to those credits, that both of these lines are completed. So you list the credits that folks were given against their taxes, and you also list as a revenue the state replacement of those levied taxes. Most of the time, these numbers are equal or very close, with line 14 being less than line 3 if the state didn't fully replace the loss on credits. I have seen a county before that forgot to put the reduction here in the credits, but still listed state replacement, and that will overstate your revenue, right? If you weren't making any adjustments anywhere else. So just sort of bear in mind that you want to make sure that these things are filled out and that they're making sense at the end of the day. And again, the property tax side of it is probably sort of the most confusing on the revenues detail page. So I wanted to take some time and go over that. The other thing we talk about too is sort of the very bottom of that page. You can see that line 33 is going to just be the sum of your total revenue and other sources. So really what that is, it's your revenues plus your transfers in, money coming into these funds from other budgetary funds. So that's line 33 is essentially the sum of those. And then you're going to plug in your beginning fund balance by all of our different funds, our general, basic, general supplemental, etc. You're going to plug in those beginning balances here, and then your total resources is the sum of line 33 and 34. So that is the revenue page, and we'll talk about expenditures. Were there any other revenue-based questions that came in?
Think we had one
Okay,
asking a couple slides ago, are lines 3 and 14 the same amount?
usually, yep.
Okay.
And if they aren't the same amount, they're very close. With, line 14, oh, it may being a little less maybe, but you'd never expect line 14 to be more than line 3. Because again, what a credit is against levied tax is, someone owes this much property tax, but they're getting a credit, so that lowers the amount that they actually have to pay. And then that difference is paid to you as a revenue by the state. So kind of essentially is supposed to make you whole with what you asked for, right? So yeah, line 3 and 14 a lot of times are the same number. Okay, so we'll go ahead and switch to expenditure side. So the expenditures are several pages of like all these pages of your form. Again, looks just like your budget form with the same tabs, service areas 1, 3, 4, etc. So you're reporting by service area, program area. You pull that data from your software, you'll plug it in using sort of the same chart of accounts lines. And those activities in detail on each page. Again, if there's a question regarding something, you can always use your chart of accounts as a resource, and it is located on our resource page for counties. For each of those service area pages, program area pages, it does total. So each of those, service area 1 is going to total up to the at the bottom by fund and total for that service area. Those page totals then carry forward to what is essentially sort of the expenditure summary, and that's part of the service area 0 page. So that's where I'm really going to focus this discussion is on that service area 0, because that's the summary page. And did I mute myself for a minute? I'm using a different headset, so I want to make sure that everyone can hear me. Am I good now?
Yes, you did cut out just for a second, but you're back.
Okay. Yeah. It's got just a really weird mute button. So, okay. So I'm going to talk about the service area 0 page because that's really where we find our expenditure summary. So again, each of those, you'll go through and plug in all your numbers for each of those service areas. This is service area 1, expenditures. by all those line items by fund. It'll total for you, across the line items and also on the bottom. And then it's going to pull over to the service area 0 page and provide a total for each of those areas. That's also then going to pull over to your summary page and then the page that you publish as summary. So those are pretty straightforward, right? Enter all those in. They pull over to the service area 0, as an expenditure summary. Also pull over to your summary pages and your publish page. The next piece, I guess, chunk of service area zero is where you see the transfers out. So on the revenue side, we had transfers in, right? So those are revenues between funds that are coming into, um, you know, coming out of one fund into another, and then is sort of a revenue or a resource for that fund to use, right? So if we think about, say, the transfer from general basic to secondary roads, that transfer is on the revenue side for secondary roads, right? Because it comes into secondary roads as a resource to be expended. And it's a transfer out or sort of a requirement for your general basic fund, right? Because it's coming out of your general basic. It's removed as a resource. It's from general basic and moved into secondary roads. So on the service area 0 page, lines 23 through, or excuse me, 24 through 27 are the transfers out. And again, this is between budgetary funds, right? The example that I gave you, that secondary roads transfer, that's probably the most common one that everybody's going to do with general fund, rule fund, whatever. Those transfers between those funds to secondary roads. If you make a transfer out to a non-budgetary fund, that would be incorrect because if you're moving money from your budget outside of that budget, then it's actually an expenditure, not a transfer. Even on those situations where it's still a fund that you are the fiscal agent for or you're managing it, what have you. So an example I could think of would be, so you provide as a county, say you provide a certain amount of money to your EMA, right, to your emergency commission, emergency management commission. So as a county, you're probably, managing that fund as, say, an agency fund. Like you're the bookkeeper as the county, maybe for that fund. So you see the money going in and out, right? However, once that money that goes to them is no longer under the control of the board of supervisors, it's not part of the county budget or the board of supervisors budget. So it's actually an expenditure the board is making to that EMA, right? For the EMA board to do with it, as they have budgeted. So just sort of keep that in mind when we talk about transfers in and out. It's really those items that are transfers are those that are within the board of supervisors purview. So your general fund, rule fund, secondary roads, debt service, those funds that are on, like, physically on your budget as funds or your report as funds. And so if you run into some of those issues, certainly reach out to your audit firm, or let me know if you have those kind of questions about anything specific. And then your transfers out in total um, are going to be totaled on line 28 on that expenditure on that service area 0 page. Line 29 is any sort of refunding if you do some refunding of long-term debt. So that's, real situation specific in any given year. You may or may not be doing that, or payments to escrow, et cetera. And then line 30 is increases and decreases of reserves. again, may not be applicable for you. So, so we sort of worked our way down through service area 0 and all those requirements. When we get down to the bottom of service area 0, we want to talk a little bit about fund balance. So fund balance is, of course, whatever is uh, left over essentially at the end of that fiscal year. When we report our fund balance, though, according to GASB 54, which GASB is Governmental Accounting Standards Board, they do all sorts of standards for the accounting profession and financial statements to try to create consistency in financials for comparability purpose, all that sort of good stuff. So anyway, they issued an sort of what they call a statement guidance really on how to break down fund balance for purposes of reporting. So someone, if they're looking at your financials, would be like, okay, I know they have $1 million in fund balance, but what exactly are there any, restrictions on that fund balance so I can better understand how they're doing financially? I mean, that's really what we're talking about. So with this GASB statement that they did, they said, okay, for governmental fund balance, there are five sort of components if we look at a fund balance at the end of a fiscal year: non-spendable, restricted, committed, assigned, and unassigned. And obviously, depending on your county and the particular circumstances, you may or may not be using all of these. So we'll go through them real quick. Fund balance, so non-spendable, that's fund balance that can't be spent. So it's things like inventory, like a revolving loan fund where you never spend, that that chunk that was initially put in place, or principal of an endowment, that sort of thing. So non-spendable cannot be spent. It's just going to sit there, right? Restricted, these are things that are restricted by law for particular uses, or by creditors, for instance, um, that sort of thing. So you might think of, say, secondary roads, or your special revenue funds may be restricted in nature. Um, Committed would be when your board of supervisors place a specific binding limitation on some of that available money. So they would take action in a formal way to say, okay, we're ending fiscal year 25 with $1 million, but $50,000 of that is being set aside for a particular project, whatever that might be, because we're trying to gather some fund balance, set aside some fund balance for a specific activity that we're going to do, say, in the next fiscal year or beyond. An assigned fund balance is similar, but not as formal. It's assigned, or by the Board of Supervisors, maybe, or maybe they delegate someone, the county auditor or a budget director, to assign certain, certain monies for particular savings. Like, okay, um, if we need to buy new cars for a particular purpose, say for the sheriff's office in 3 years, then we're going to set aside, $10,000 for 3 years to help towards that cost. And so it's a little less formal than committed, where they actually commit and then they have to actually remove the commitment. Assigned is, like I said, a little less formal and may not be your board of supervisors. They might delegate that authority. Unassigned is just basically, well, what's left that's available for any purpose that doesn't have these designations or restrictions on them. So the fund balance, if we look at the actual forms, and we'll do that here in just a second, the fund balance on that line 35 is going to be the same as line 36 unless you have indicated certain entries on the lines above. So if you've said something, certain amount is committed, restricted, non-spendable, then that's going to make your unassigned amount less, right? So if you had $1 million and you didn't assign any of it to anything, then you have $1 million and it's all unassigned. You can do with it whatever you want. But if you have $1 million and 500,000 of it is restricted, then your unassigned or just sort of the money you can do with whatever is going to be $500,000 because of your million, 500,000 is restricted, leaving 500,000 to be used for any purpose or unassigned. So on the actual software form itself, that ending fund balance that we're talking about is a calculated form. It's the product of total requirements minus expenditures minus operating transfers out plus any change in reserves. And I'm going to again walk through an example of that. And then total requirements, which we talked about earlier, your total resources and total requirements equal each other. So this again is a calculated field. It's a total of lines 23, 28, 29, minus 30 plus 36. And it is a calculation, and again, it equals total resources. So I'm going to go through an example of fund balance um, calculation and then also total requirements, just to sort of give you an idea of how those are actually calculated when you look at the spreadsheets or look at the actual budget forms. So we talked about your fund balance calculation, right? So the system is going to go through and it's going to calculate based on your resources minus all of your expenditures and other things. It's going to calculate what your ending fund balance is. Like, okay, based on the money you have, what's left over after expenses. So this is line 36, and this is calculated for you. So we see it's in this case, and this is from someone's actual report, but fiscal 24, 22 million nine. So 22 million nine is our total ending fund balance. So let's get to how that plays out between the different designations. Well, in this example, this is the general basic fund, but they said, okay, 1.3 million of that 22.9 is actually unspendable, non-spendable. So that's a designation that was made. Line 32, 7 million of it is actually restricted in use. So it's restricted by law in one way or another. They did not have anything that was committed or assigned, so those are both zeros. But if you take that 22.9 and you subtract out their their non-spendable and their restricted amounts, you're going to be left with 14,488. So that's the amount that's actually unassigned and available for, emergencies or just, cash flow, whatever. So 22.9 is the full amount that's in fund balance, but we've got it chopped up into these different designations, right? So some of it's non-spendable, some of it's restricted, whatever's left is unassigned. So that's just a way to sort of walk through the calculation itself. If you kind of go through and say, okay, total fund balance, what's designated, anything that's not designated, whatever's left is the unassigned amount. And again, these are calculations that the system does, but I want to make sure that you're sort of understanding what that math is behind the scenes, right? Okay, so we talked about the total requirements calculation. So what is that looking at? So total requirements, excuse me. So total requirements here, it's a summation of other things that are going on within the budget. You're, again, not entering this number. It's a calculated field, and it is the same number as your total resources. So it's the 114, 546, 396 is our total requirements. To get there, it's total of all of your expenditures. So that 80 feet, 85, um, whoops, sorry. It's the 85, 834, right? So line 23. All expenditures plus line 28, which is your transfers out. So money moving out of funds. It's that 5.6 million. And then if you had any refunded debt that that you dealt with in the fiscal year, that would be listed here. And then this is any increase or decrease, so a negative number in this case, to reserves. And so they did a negative 103 plus your total ending fund balance, right? So it's all of your expenditures, your transfers out, 29 and 30 if there was any, of those small things to report there, plus your ending fund balance, that equals your total requirements. So in this case, again, if you add these, subtract out line 30, but you're subtracting a negative, so it's actually adding it. But again, that's just sort of the math behind this sheet here. So you can see, well, how was that number arrived at? And again, this is out of somebody's actual fiscal 24 AFR, just to kind of use some real numbers. So again, you don't need to enter these numbers. These are all sums here. They're gonna be based on what you had entered in other fields. But I think it is good to know how those numbers are arrived at in case you have something weird going on. Then you'll know, well, where do I look first? If that number is the sum of these, well, is one of those numbers wrong? And then since that number is a sum, then is one of my expenditure numbers wrong, for example. Okay, so I want to talk a little bit about the balance sheet. I don't want to give too much time to this. I mean, I know a lot of folks work um, with their audit firms to kind of to understand and work through the balance sheet. The balance sheet, again, we're talking about GAAP reporting. And the balance sheet provides a different way to look at your financials, right? So it's just a way to look at your financials in sort of a different picture for your financial statements. The annual financial report, of course, always includes budgetary funds, but some non-budgetary funds like drainage districts are included in the gap, but are not included in cash. So just FYI there. And one thing to mention, because this is where I get the most, where people kind of struggle the most with the gap report, you enter, all of your information and then it sums up to that summary page. You're also going to enter the balance sheet information, which is, same big picture information, but it's presented in a different way, right? It's still your total financials, but it's presented in a different way. At the end of the day, though, your balance sheet fund equity has to match what you said over here for your fund balances on the gap summary. I mean, it's the same and information, right? It's just that it's presented differently. If those don't match, then you will get an error. Now, I will say sometimes they don't match, and guys, it's just rounding. It's like $1 or 2 off. Just fix it. It's just make an adjustment so they actually match. That is not material. But if they're way off or you're reporting something in one category of fund balance designation here and not on the balance sheet, you're going to have errors. So this is sort of one of the most common things that trips people up. So the balance sheet does have cash and pooled investments. That's for recording cash on hand. And you can kind of work through this information is listed in your instructions. So you can kind of work through those different lines from the balance sheet. The balance sheet primarily is data entered by you, other than just sort of the cells that are sums. So keep that in mind too. There's some information here on when receivables are deferred or not. So you might want to take a look at that. Um, Again, it's in the instructions. If you have a specific question, you can work with your audit firm through that situation. Accounts, that's for amounts that are due. And again, we're talking about sort of our um, our information here for amounts that are due. Um, property taxes collectible, including any penalty or interest. Again, same information, but it's sort of categorized in a different way, looked at a little bit differently as far as summations go. Drainage assessments, again, if you've assessed for drainage districts but not yet collected, then that would be something that would be reported. Due from other funds is just, within your fund structure, what are the receivables that should come in from other funds from the county? So you've got due from other funds and due to other funds, which is sort of like with transfers, your transfers in and your transfers out, you would expect those to balance. In most cases, there may be some where they don't, but in most cases you would expect those to balance. And if they don't, or if they're way off, you'd want to understand why that is. Due from other governments, those are just receivables that are due to the county on or before June 30th, but may become available after the 30th. Inventories, other assets, and then again, it's going to total. So for your total assets. So total assets, so sort of those assets must equal total liabilities and fund equity for each fund and in total. Or again, you're going to get a balance sheet error. So it's just, both sides of the coin need to balance each other. On the liability side for the balance sheet, it's going to go through things like accounts payable, pretty understandable there, salaries and benefits, contracts. Again, we talked about money coming in and then money coming out between funds. So due to other funds, due from other funds. Again, sort of that movement of dollars between funds, you'd want those to balance. Due to other governments that you need to be paying out, any trusts that are payable, any deferred inflows of resources, that would be succeeding year property taxes, which we have the succeeding year property tax receivables, so those balance out. And then any other unavailable revenue, so amount that's due to the county at the end of the fiscal year, but not received during the revenue recognition period, July or August of the new year. So again, this is a different way of looking at our financials, maybe than the rest of like a cash basis situation. But it is, a required piece of information and helps look at your overall financial picture in a sort of widespread, generally accepted way of looking at financials. On the balance sheet, you're also going to have other liabilities and total liability. And then it's going to walk through those same fund balance designations. So again, the pie is cut up a little bit differently, but these should match what you indicated on your service area 0 for the gap report that's then pulled over to the gap summary. So just again, keep in mind total liabilities and fund equity need to equal total assets by fund and then in total. So kind of keep that in mind. Those are some of the issues that you run into as far as errors go. And then before I switch to talk about that new debt report, are there any questions about the expenditure side that came up?
Nope, I don't see any.
Okay, so I'm going to talk about something new now, which is always lovely. So, with House File 718 that passed a couple years ago that made various property tax changes, they also put in place a new debt reporting requirement, both for uh, cities and counties, and then also for Department of Management. So, there is a requirement for us to give information by January 15th to the General Assembly on the use of bonds and debt, essentially general purpose, voted, non-voted, essential, and the amount of debt that's out there, et cetera, right? So lots of different information related to debt that we at Department of Management, me and Ted actually, because it's just city and county, are going to be required to report. And then it was added as a requirement to your annual financial reports. So um, we we Ted and I kind of worked through, and the city and county debt page in the AFR are pretty similar. He has some additional information that he has to include for cities, but essentially beginning with this fiscal 25 report, there needs to be a listing of all outstanding bonds, notes, or other obligations, and that's just the statutory language. The amount of the issue, the purpose of the issue, the method of approval, and if it's tied to any other debts. So, or is there, a couple debts that were issued for one major project, for instance. So again, it's a new page that was added to the AFR, added it to the GAP AFR because that is where you all have to report. Everyone has to complete a GAP AFR, so that's where it is. It's a new page called County Debt Detail. It's going to feel a little similar to your long-term debt page of the budget. It's got a few extra pieces of information. It's a little bit different, but it might feel a little bit like that. You're going to be reporting on the rate range. So, what's the lowest and highest interest rate you're paying as you pay off that debt? Principal outstanding as of the beginning of that fiscal year. Method of approval essentially is it voted, non voted? Is it tied to another debt, like I mentioned? Is it related to, were there multiple debts issued for the same sort of situation and the purpose of the debt. What was it used for? So, in your GAP report, you will see there's a couple pages here just in case you have a lot to report on. Um, but this is basically what it looks like. And again, if it's a blue cell, you're going to enter in text. And then there are a couple drop downs here. So I'll kind of walk through what these are all looking for. So, starting at the left, debt series name. Basically, you enter the year of issuance, authorized repayment source, and purpose of debt as the name. So, if you have issued bonds, they sort of have a standard way of being named. So that's what you're going to use. Type of debt, authorized repayment source of the debt. Is it GO? Is it revenue, for example? Date of issuance, pretty straightforward there. When was it actually issued? And the resolution, so the resolution that was approved, um, the date that the resolution passed essentially, and the resolution number. Rate range, again, that's where you're going to enter the lowest and highest interest rate that's charged on the debt, over its life. And that, you can just kind of pull out your amortization schedule. Usually, you should have that detail. Voted, so you'd select the approval method that was required. Was it voted? Was it no vote because it's essential GO? Was it no vote because it was below the threshold um, that would require citizen vote? Or was it just simply not general obligations or revenue debt, so you didn't have to have a vote on it? And then amount of issue, so the amount of principal originally borrowed with the approval of the debt. And principal outstanding, so the amount of principal remaining to be paid at the beginning of the fiscal year. So at the beginning of fiscal 25, how much principal is still outstanding? Also include anything that you issued during fiscal 25. So if you do if you're a county that has TIF debt and you do the annual urban renewal report, this kind of probably feels familiar. So you're going to report what was owed at the beginning of the fiscal year and then also any debt that you issued during the fiscal year. Tied to other debt, if multiple debts funded the same project, then you'd sort of use that drop down to tie them together. Purpose of the debt, again, just you'd select geo or what have you. And then projects funded by the debt. Now, this is where you'd enter text. There's a character limit of 150 characters. So you're going to need to be brief. Spaces and punctuation count. Don't use any weird like ambersands or any, you know, characters that aren't letters or numbers or, punctuation. Just sort of an FYI there, but you're going to have to be brief. So this is just an example. We have Geo Road Bond Series 2014A. It's a Geo. Date of issuance, that should have been 2014. Whoops. Debt resolution number and the rate range. And then it was a non-voted essential Geo, and the amount of the issue was 200 million, or excuse me, 2 million. Again, general obligation tied to other debt in this case, no. And it was secondary road improvements. So pretty straightforward. As you're working on these guys, just let me know if you have any questions. Just a few reminders. TIF rebates and agreements. We're we don't want you to have to go through and itemize all these, right? So TIF rebates and agreements, we're going to have you aggregate that onto one line. The amount of issue is the total of the original not to exceed amount. That is your obligation, right? Principal outstanding is the not to exceed minus any amount paid to the beginning of the fiscal year being reported. And again, in the purpose, you're not going to be able to list a lot. So just try to be concise when you do that. So that's the new debt page. I know it's new, so certainly ask me any questions that you have. It's really just an opportunity to report that debt and share that information, and then we get to share it with the General Assembly in a report. So please, please. Complete your GAP AFR in a timely fashion because I won't have a ton of time to prepare the report that we need to present. For the online system, just a quick overview of what that looks like. County auditors, if you have the county auditor role, if a county auditor or any staff member does in the system, you're going to have access to the AFR. If you've got some finance people and like their one responsibility in our system is doing the AFR, we could give them access just to that thing. So just let me know if you have staff members that need to have specific access. And your access, if you had access, it's going to just move along with you. The system, as far as movement within the system, are pretty much the same as any other forms you work in. And again, ending fund balances are a produced number. They subtract your expenditures from the sum of beginning balances and any revenues that came in. To go, to access the system, again, you go to that county resources page under online applications. It's the same system that you do everything else in for department management mostly. You'll log into the system with your A&A account. It's going to look a little bit like this. And you'll see the AFRs for 25 out there as new. Also, you'll see the past year's AFRs. And then to actually get in and work on the AFR, you click the edit icon to get into the system. As a county auditor role, you do also see your cities AFRs. Not that you need to do anything with them, but you will see them also displayed within the system. Again, if you're not a county auditor role and you're just assigned to do the AFR, you'll just see the annual financial reports and just your annual financial reports to complete. Again, you go ahead and do the edit button to get into the system. You'll see the tabs that we showed you a little bit before. Blue cells, again, your budgeted totals here. This is where you enter data into the system, but if it's a white cell, it's either calculated or it's a sum or it's pulling from another page. The instructions document is under the instructions button at the top of that AFR. Obviously, don't need to tell folks, but please save often as you're working and definitely at least before you leave the tab. And whenever you've saved, it's going to give you that green notification that you did update successfully. Be sure to check errors when it's green. You're good to go and proceed. If you do have errors, they're displayed in red. You can't move forward with the AFR if you have errors. You may also see warnings. Warnings are in yellow and they don't prevent you from publishing, but you definitely want to take a look at them to see what the warning is telling you. When you're ready to publish the AFR, you would select the Publish Posting button. And the application, again, does its own error check. You do proceed or just if you're, kind of went down the road, but you're not quite ready, you do cancel. The system is going to require you to enter the date the AFR will be published in the newspaper. So you'll want to know before you click that button when you're actually getting it published in the newspaper. And then, of course, you enter the date in here under publication date and do submit. The application generates a one-page PDF that you can submit to your newspaper. You can print it, you can save it off, print the full AFR, whatever you need to do. And of course, we talked a little bit about cash basis and gap basis. Everybody has to do gap, but cash basis counties don't publish it in the newspaper. You do still select that option, but you're going to just enter the date of posting to the website. Obviously, if you're at this point, it would be the date you click the button. So, you're finished and you're ready to see this report go live on our website. So for the gap report, those that aren't publishing it, whatever date you enter here is what we consider as the date that you're finished with the report and that you're submitting it. And that's when you click that button and do submit, it's publicly available on our website. Again, you can amend these reports at any time during the next fiscal year. If you find you need to, you just go into the report, just do an edit at the top, you'll see an amendment option. Now, it's not available until you've already published, right, or posted it. But if you were like, oh, we just had our audit, I need to go back and make a correction, go into the report, click the amendment button. What it essentially does is take the report that you submitted and open it up for edits. It doesn't wipe anything out, it doesn't change anything, it just makes it editable for you. You make your edits, save, and then move from there. So you click the amendment, it's gonna say, are you sure? You say yes, it opens up the report for changes. Be sure to save again and be sure to publish or post again to finalize your changes. It does give you an option to enter a new publication date, and I wouldn't do that unless you actually are republishing, right? Um, It does generate a new PDF if this is, say, your cash report, but you don't need to do anything with that unless you're publishing it again. You can save it for your records, like, hey, this is, a hard copy of the AFRI amended, but it is, considered submitted on our website once you've, hit that publish post button again. So at this point, that's all I have to say about the AFRs, but certainly let me know if you have any questions. Were there any that came up in the chat? Looks like maybe a few. Oh, okay. Looks like maybe those were answered. Okay. So were there any other questions that anyone had regarding the AFR?
There was one about the recording, and yes, it will be on the ISAC website along with Carrie's presentation from
Yep.
today.
Yep. So I will provide the the presentation. I'll email it over to ISAC so they'll have it available. And then I'll just send out, once that's posted to the ISAC website, I'm just going to send out an email to county auditors and anyone that's, signed up in the system for the AFR, and just sort of direct them to that in case anyone missed the webinar today. So we'll do that. And again, if you have any questions as you're working on it, especially with that new debt page, please let me know. I know that, you know, especially with the gap AFR, you might not be working on that for a while, but yeah, I'm here to help if there's anything that folks need.
Sounds good. Thanks, Carrie.
Hey, no problem. Thanks a lot for inviting me and letting me talk about things. And yeah, just if there's anything anyone needs, let me know.
Sounds good. Have a good day, everyone. Thank you.
Okay, thank you. Bye bye.